Good afternoon, everyone, and welcome to IAB Europe's Economic Trends Forum. We're just going to give it a few seconds just to allow everyone to connect. We are live this afternoon, and as most of you, hopefully we've got some familiar attendees. This is your bi-monthly forum to hear the latest market stats and facts. So we are fortunate to have our Economic Trends Forums presented by our Chief Economist, Daniel Knapp, and he tends to cover everything from topic deep dives to trends and developments. And today we are delighted to be presenting the 2020 AdEx full report. So as most of you know, this annual piece of research is compiled by Daniel, and it's the definitive guide to digital advertising expenditure in Europe. It covers 28 markets. Today, Daniel will do a deep dive into the channels and formats that contributed to 2020's market value, giving some idea as to the reasons why we saw the 6.3% growth across Europe in 2020. Before I pass over to Daniel, just to let you know, we are live. This will be recorded, and we will be uploading it along with Daniel's presentation onto the IAB Europe website tomorrow. At the end of Daniel's talk, we will be taking questions from the audience. So if you have any questions, please put them into either the chat box or the Q&A box. And you can put these throughout, and we'll compile them at the end. So with that, I'm going to hand over the mic to Daniel.
Thank you very much, Helen, and a very warm welcome. We just recently compiled the AdEx benchmark study, a meta-analysis of ad spend in 28 European markets. And I have worked on this study since 2007. And one might think that it loses its novelty effect, but this year was probably the most exciting one we ever had in analyzing this market. So I'm going to share with you the results of the study, and also some of the thinking why we saw what happened in 2020. So our study covers all these markets here. We have a very strong coverage in Europe. You see Portugal, the Baltics, and some countries in the southeast of Europe are not included. But from a spend perspective, we probably have around 96% of the total European market included. This study is done by the local IABs for the IAB. So before I start, very warm thank you to all the IABs for providing numbers. Our job at IAB Europe is to take the local market estimates from the national IABs to harmonize these numbers so that we have an apples to apples comparison, and then also to add our own estimates so that we have a market size which is aligned in terms of definitions. And this has become more challenging in recent years, given that the market structures have changed. In particular, as global platforms are not releasing by country information, there's a greater deal of econometric modeling required to generate those numbers. Let's dive into the different markets. So what have we seen in 2020? I think it's remarkable that the market grew actually by 6.3% to a total market size of nearly 70 billion euros in 2020. At the beginning of the year, we wouldn't have expected this performance. You can clearly see on the left side here how we, alongside other forecasters, have continuously revised our estimates for digital advertising upwards as the year progressed. In April 2020, when the market really collapsed and we had some first kind of monthly data from some of our national IABs come in, it was a doom and gloom scenario. We saw spend, even digital spend, which was holding up in previous recessions, in particular in 2009, really collapse. However, the rebound was quick. So digital didn't have a bad year, it had a bad quarter in Q2, and we already saw market recovery across the board starting in June, with a stronger Q3 and a stellar Q4. Now, this Q4 exuberance that we've seen hasn't been carried forward into Q1 2021, and we're only now seeing the market accelerating again. But more about that later. The key issue is that not all markets followed the same trajectory. We could see a nearly simultaneous collapse, but the recovery was different because it was strongly influenced by local lockdowns and government responses to the pandemic. For instance, we saw in markets like Spain and France, in Q3, we saw seasonal dips, but then fast recoveries. Same, for instance, with the UK later in the year, whereas, for instance, markets like Germany, which navigated 2020 fairly well, had a fairly linear recovery path, and some markets were, well, hardly affected at all, like Turkey, where the, well, low digital ad spend per capita and the kind of just organic vibrancy of the market was kind of outgrowing any negative impact that could be attributed to COVID. So we ended the year as a digital advertising industry stronger than expected. As I mentioned in some earlier webinars, we really saw that the econometric models broke down. If we had followed just the econometric models, the digital ad market would have been depressed by around 10%. And digital media, actually, it did follow the economic model. So non-digital media, they were down by around 23%. But digital bucked the trend, mainly apart from macro factors, due to the streaming explosion, the rise of SMBs who really had to sell, but also because advertisers, which can be very conservative in crises and cut spend, didn't do so across the board. Yes, the travel industry did, and we see the effects of that in search advertising in particular, as I'll show you later. But we saw FMCGs and others not cutting back spend and rather reorganizing their campaigns and marketing outreach to people's changed circumstances. So ad pressure was fairly continuous throughout the year. Now, having said that, if we look at the trajectory since 2006, we've done this study, it was the lowest growth on record. 6.3% is the lowest we've ever recorded. In the previous financial crisis, the market grew by 8.9%, and the average growth rate, the compound annual growth rate between 2006 and 2019 actually was 19.5%. Now, a few things are notable though. Number one, in no recession that we had in Europe did the digital ad market really ever decline. We had the within the scope of the study, we had the financial crisis, but we also had the Eurozone crash, not reflected in these numbers. And we have to see that the comparison of the 6.3% last year with the 8.9% in 2009 isn't entirely fair. Because in 2009, obviously, digital was much less mature. Only 19.2% of all ad spend was digital. Whereas now we are in a digital first market where 56.5% of all ad spend across all media, TV, radio, out of home, print, etc., is being attributed to digital channels. So the market is much more mature, and despite this maturity, could continue to grow. We saw spend coming from different categories. We saw spend come from traditional advertisers who were already large, for instance, FMCGs, Fortune 500s, but in particular from FMCGs, new spend, companies that didn't advertise at all on digital before, or that moved so-called below the line activities above the line. We also saw a reallocation of spend from offline channels to online channels. And within digital, we saw in particular search spend migrating to programmatic. Now, if you look at those 28 markets, they're clearly not created equal. And you can see what a tremendous weight in the overall EU 28 markets that we have here, the UK, Germany, France, Russia, and Italy have. The UK is more than twice as big as Germany. Bear in mind that all numbers that we are showing here are for like comparison in 2015 euros. So if you convert into 2020 euros, the balance might shift slightly, but the ranking of markets would remain the same. It is remarkable that you can see over recent years that some CEE markets have made it into the top 10. Russia has progressively edged forward, now is actually the fourth largest market in Europe. And we also see Turkey pacing ahead quite quickly. But you can see, of course, that we have a massive long tail of other markets, which are locally important and extremely vibrant, but which do not contribute that much to the overall European market size. If we zoom in a little bit, we can understand these nuances a little bit better. So on the left side here, you go 2019, 2020 for all of the markets. On the right side, we looked at the mid and the long tail, and you can see in more detail how the differences between those markets are. They're affected, the size of the market affected by several factors. Number one, of course, the size of the country, the addressable market. Then also broadband penetration and the overall, well, digital maturity and the infrastructure, but then also trading cultures and how important legacy media are. You can, for instance, see, if you look at Italy, which is just trailing behind Russia now, which is the second or third largest, depending on how you look at it, television advertising market in Europe, it is much smaller in comparison in digital, just because the local television groups are so strong. And also you have a strong north-south divide, for instance. And just recently, there was an article in the FT looking at Eurostat data that only 1 in 10 Italian businesses prior to the pandemic actually had an online presence. So you can see all these factors here contribute to how the market makeup looks like. And we shouldn't think just because a market is small in terms of overall population, that it's going to remain a small digital market. For instance, if you look at Switzerland and Norway and Austria, also Denmark, these are cases in point. When it comes to growth, 6.3% on average in Europe, but you can see a huge distribution of growth where 7 markets actually, despite the pandemic, grew double-digit. The makeup of these markets clearly shows that these are predominantly Eastern European markets with lower ad spend per capita and this kind of organic vibrancy in the market that I mentioned earlier. But you can also see Germany posting just double-digit growth, actually a stronger performance than some of the in some of the previous years, despite the pandemic, as we went through the pandemic quite well. And we also saw lots of new business growth in Germany last year. I crunched the numbers recently, and there were 24,260 new businesses registered in Germany, many of those with a focus on online sales and e-commerce. If you look at how the market continues to distribute, we can see the UK, the largest market, underperforming, number one, due to its overall size, but also due to the impact of the pandemic. When it comes to the markets who were declining, there were just 3. Belgium, also severely affected by the pandemic and not a very strong digital market yet. Spain, due to the numerous local lockdowns and also the high exposure to tourism in the industry, and Belarus for very different factors than the pandemic because of the volatile political environment. Now, if we look at which markets delivered the revenue gains in absolute terms, so not in terms of growth rate, but how many euros did each market contribute to the 6.3% growth in 2020, we can see the following picture. Although the UK is twice the size of Germany, it only delivered, well, less than 200 million more to the overall growth pot than Germany. And we could see Turkey, although the market is just barely in the top 10, was actually the market which in terms of euro volume contributed just half as much as Germany, and it was the 3rd market. We can see, for instance, Spain here, a large market, but just because its small downward correction actually dragged the market down by nearly 100 million. All of this growth in digital has resulted in a rapid reshuffling of the overall media share landscape in advertising. Typically, we've seen in the last couple of years an annual increase in the percentage points that digital has in terms of the overall media share of around 2.5 to 3%. This time it's quite different. You can see on the right side here that many markets had solid mid or even high single-digit, and some even double-digit percentage points increases, i.e. the share of digital of the overall media pie. And if we look on the left side, where we combined our own AdEx ad spend data with other media data from WARC, we can see that in a range of markets, we are now already digital first, i.e. this 56.5% average share that digital has, it manifests itself in quite a few markets. But you can also see how, for instance, if you start looking at Finland, you can see a massive downgrade in terms of the shares, and we see some markets really have still a lot of headroom to grow, as they are not very reliant on digital media compared to other media channels for advertising. When it comes to European to ad spend per capita, which is an indication that we always use to understand how mature the market is, i.e. how much money is being spent on digital advertising per head, you can again see a fairly wide range. The European average was 87 euros, so 87 euros spent per head on digital advertising. In the UK, it was over 300, and you can see that some of the rich Nordic markets, Sweden and Norway, are trading closely behind, Switzerland as well. But you can see, again, if you look at the picture of Italy, for instance, a very strong economy, also Spain, that they are just below the European average. And France, again, a very strong media economy, is just in line with the European average, which means if you look at some of the largest economies in Europe, some of the largest ad markets in Europe, the top 5 markets overall, apart from the UK, Germany, Italy, France and Spain, you can see there's still a lot of headroom for growth, as those markets will over time come closer to the digital ad spend per capita that the UK occupies. Meaning that we are not reaching a ceiling in terms of market growth. There's much more growth to be had beyond the 69.4 billion euros we achieved in 2020. This, as some of you know, is kind of one of my favorite charts, as it really contextualizes the market growth. The bubble size here reflects the size of the market, and then we can see ad spend per capita on the x-axis and growth on the y-axis to understand the relationship between vibrancy of the market and the maturity of the market. The UK really is in a different universe that you can see, far removed from dynamics in other markets, largely driven not just by the overall early move towards digital and many indigenous digital businesses, platforms often being the first from the US to locate to Europe, being here, strong broadband penetration, but also and in particular because of the strong surge in e-commerce that we've seen in the UK over recent years, even before the pandemic took hold. You got a second bucket in the middle here, which is the very wealthy European markets, Switzerland and the Nordics, who are also detached from the rest, but who are growing slightly below the European average. The most remarkable group is the breakout group, the group around Germany, Czech Republic, Austria, Ireland, and the Netherlands, which has a spend which is a digital ad spend per capita higher than the average. In particular, Germany was a market that used to underperform, that was behind the average growth rate for 3 to 4 years in a row. And now we see finally this breakout group happening, advancing further to the right side. And you can clearly see when you look at markets like Turkey, Ukraine, Serbia, that these markets, despite, for instance, Turkey, its size, are markets that are still far from mature. There's still a lot of spend to happen. And as these economies develop stronger middle classes, wealth, etc., these markets will move further to the right. But digital advertising isn't one thing. It's not one bucket, and there are huge differences between the formats. And these formats tell us the performance of these formats tell us about a lot of things. It tells us about a shift from performance to brand building. They show us about the importance of programmatic and the struggle that search advertising went through. But it also shows us some of the competitive dynamics that we have in this market very clearly. So if we take the overall market, we can really see underlying the 6.3% was a multi-speed market. Classified directories and affiliate, which we bucketed for the first time together, were down 9.1%. By the way, why do we put affiliates together with classifieds and directories? Because affiliates are a very elusive category. Sometimes it's a bit of display in there, sponsored links, but also affiliate type placements. So in order to just harmonize it and not to obscure other dynamics in the display segment, we moved them into the classifieds and directories segment. You can see that search, which is still the dominant category in terms of overall, or used to be the dominant category in terms of overall spend, was only growing by 7.8%, clearly affected in particular by the exposure to the travel sector, and because performance spend was moving more towards display, to social channels and to programmatic. Display was really the key driver with 9.1%, but within display you can see a very stark dynamic that without social, and that isn't just Facebook, but also now TikTok, Snapchat, and so forth. We do not include YouTube and social, by the way. Without social, the display market would only have grown in line with inflation, plus 2.5%. And it was really social that was lifting that. But it isn't all bad news for display. If we drill down a little bit further, we can see more very encouraging pockets of growth that have emerged in 2020. So overall, in terms of share, you can see, if you look at it together, a display overall has the largest share of everything, but display is really different markets with different speeds and also different definitions, which becomes very important now in a world of first-party data as third-party cookies deprecate. This isn't a single market. But the fault lines are, of course, social or walled gardens on the one hand and the others on the other. We don't separate here between walled gardens and the so-called open internet, but the social component gives you an indication, at least, what the direction of travel is. Digital could accelerate its share gains in 2020, which it has been collecting over a period of time. So we could see that the kind of pivotal moment happened in 2018, when for the first time the display market was larger than the search market. But if we look into display again, we can see it's two things, and a lot of the growth comes from social. Looking at social now, social today commands around 50%, just above 50% of all display spent in Europe. This is a first, and we needed to change our methodology to account for social. We already in the previous year's report called for a 50+% share of social, but we needed to redefine the market as local IABs changed their measurement. So we have a longer long tail in the non-social bit on the one hand, which we didn't capture before by the local IABs. And also we built our own model at IAB Europe that focuses on the SEC filings that social platforms provide. And then we did European segmentations, and on that basis, then market by market segmentations. And then we cross-reference that with what local markets were saying, because a key issue always is in survey-based research that you're capturing spend that goes via the agencies, but not necessarily the long tail. In our method, we have addressed that. If we take display spend including social, we can see that video was the key driver. Without video, we only had around a 5% growth, but video was really driving it. And there were two parts of video. And actually, in a sense, it's a tale of two halves. In Q2, when everything was down, we still saw performance-based video, both on YouTube, both on YouTube, on social platforms, etc. Anything that had a kind of call to action to it, actually grow robustly, and we only saw around 1 or 1.5 months of decline. We then saw, with a vengeance, brand video, in particular around pre-roll advertising outside of the social platforms, come back in Q3, and then double-digit, growing in some markets in the fourth quarter over 50%. So a quite strong recovery. So the video year was, in a sense, a year of performance video, and then later on brand video resurgence. Now let's subtract social from this to take a perspective of a market that allows us to better understand dynamics, in particular around the market affected by the deprecation of third-party cookies, and also the market that is relevant for programmatic and some kind of homegrown investments. So if we factor out social, the display market was around 16 billion and up 2.5%. But traditional, i.e. banners, native, special ads, and so forth, that couldn't grow in 2020. That was down. We saw the market last year in this segment already being flat. So yes, there was an impact on the pandemic, but don't overstate the minus 1.6% as attributable to the pandemic. It is largely a continuation of a structural erosion of this market. and not attributable to a cyclical downturn induced by the pandemic. And again, video is also, of course, not a new thing to grow. It's just remarkable that it could grow double-digit during the pandemic. And for the first time ever, we broke out audio advertising with 11 markets that supplied us with statistics on audio advertising. And this is really IP-based audio, not DVB audio. So it includes podcasts and music streaming and other types of streaming. And that market is still small in overall terms, around 502 million euros, but it grew by 16.7%. And we modeled it out beyond these 11 markets to incorporate all of the 28 markets in this study. Now to programmatic. Within the display segment, outside of social, we saw a market moving towards a programmatic first environment. 50.6% of display spend across banners, native, video, and also audio is now programmatic. Audio itself is very small, but as an anecdote, we're not breaking it out here, audio programmatic growth was 77%, whereas the non-programmatic audio growth was 8.9%, which is an interesting tipping point in the market, as a lot of the audio growth came in the past from, in particular, host-read ads in podcasts or kind of manual insertions. So vote of confidence, I believe, in programmatic, as the format is still maturing, but the programmatic infrastructure is already becoming a key enabler of growth and is not being bolted on top of an already mature market. Programmatic up 8.3%, and without programmatic, the market was down 2.7%. Now, let's drill into social a little bit, because there also we have different dynamics. Social, of course, healthy growth, but the majority of the growth really came from video. And that is Facebook video, Instagram video, but also we saw an explosion in particular of Snap and TikTok from a low base. Twitter video, we don't have any numbers on it, but we really see that it is not just one social platform that is driving this growth. In terms of the share of display in the majority of markets, it's the largest format in Europe overall, but it is over 50% of digital ad spend in the majority of markets. So if you look at the right side, you can see actually that there are a lot of markets which are leaning strongly towards display. You can see the gap between the UK and the rest that we have in the overall market size reflected in display as well. We saw, and this is including social again now, we saw 13 markets having double-digit growth in display advertising. Turkey really stood out, and you can see again Germany was the fastest growing Western European market, but Ireland recorded a very strong performance as well. Remarkably, the UK, while overall growing below the European average, in the display segment, largely helped by social, grew above the European average. Now let's do some calculations and actually see what kind of contribution does video have to overall market growth? So are we in an environment now where it's really just still squares on a page predominantly, or are we in a market, we hear a lot about CTV, OTT, and so forth, are we in a market that in terms of its growth potential is just increasingly reliant on video? And the answer is yes. Video was a crucial driver overall. It grew 3.4x faster than all other display. And on this chart, I factored out, I'm showing ranked on video growth, how much the non-video component of other markets was growing. And you can see, for instance, in Russia, it was exclusively video that drove the growth. In Ireland, in a sense as well, Ukraine as well. In the UK, Denmark, Slovakia, you can see it in many markets, it was video that was really the key growth driver. Video now exceeds half of all display spend in 4 markets. These are video first. These are remarkably not just, again, Western European markets, but also with Ukraine, we have an Eastern European market in there, and look at the relatively high exposure to video that we can see in Bulgaria as well. This is for a number of reasons. Of course, in mature markets, we're seeing erosion of TV advertising, broadcasters, bundling linear TV, over-the-top advertising. We're seeing, again, social platforms, etc. But remarkably, we're seeing in markets that are still emergent, already advertisers adopting a video-first strategy. And I think Ukraine and Bulgaria are good examples of that. It's hindered in part in other markets by legacy structures, i.e. agency responsibilities for TV advertising. Is it digital teams? Is it TV teams doing availability of premium inventory, and also high broadband speeds? The UK massively outperforms all the rest of markets in terms of digital video ad spend. Remarkable is, I just mentioned the North-South divide in Italy. Despite that, Italy is social networks, but also investing in video strategies with quite a high ad load, actually. Overall, video growth mainly came from 5 countries. So nearly 70% of all video ad spend actually is allocated to 5 countries. I already mentioned audio a little bit, but let's dive a little bit more into the details. The UK is the largest audio market, but in overall size, it's not much compared to the rest of the display. 143 million euros for the UK, followed by Germany. So there's this 2x notion, UK, Germany, yet again. Germany particularly strong as the local and kind of regional radio operators, the commercial radio operators, were one of the first in the world to actually build a programmatic audio exchange from scratch. So having seen the disintermediation in other formats, these companies early on forged alliances and collaborations to build a strong local digital audio channel. When it comes to the digital audio spend growth, we could see France outpacing the rest tremendously. And when it comes to the share of display, a few things stand out. We can see that a lot of markets are clustered around kind of the European average of 1.6%. So if you don't know a market, rule of thumb, digital audio is around between kind of 1% and 2% of the overall display market. But there's some breakouts, in particular Belgium. Belgium has a strong radio culture. Radio advertising overall over indexes versus other markets. So there's a spillover effect of kind of into digital audio. And Sweden very strong as well, in particular due to the Spotify legacy in the country. When it comes to paid for search, it was underperforming in terms of growth. We can see that, again, CEE markets were the ones growing the strongest. We still have a lot of organic headroom for growth here. The story really isn't more complicated than that. But you can see, if you look at the UK, for instance, the UK has a very strong exposure to search. What was one of the largest search markets in the world. And for a while, Google was even breaking out the UK search revenues individually in its company filings. It was underperforming the European average. And that was kind of what dragged the UK down overall. We're seeing overall a kind of maturity emerging in search. Have a look, for instance, at the Nordic markets, Denmark, Norway, but also have a look at Sweden, where these were markets where search came to the market quite late, where you had a strong local directories culture. And we saw in the last couple of years, search growth in those markets being fueled by a migration of directories into search. As this migration is now complete and advertisers are looking for other ways to gain performance, we see that segment underperforming. Also, we're seeing there's, of course, a strong shift towards mobile search, but it monetizes differently than display search. And there is a trend to move away from the horizontal search, what our big search engines offer, more towards verticalized search experiences within Amazon, within retailers and so forth, which are not necessarily accounted for as search spend in our study, and some of that might bleed into display spend. In particular, if you look at large retailers with sponsored posts, when you look for makeup, shampoo, and so forth, that's kind of a hybrid category where it doesn't fall neatly into the old buckets. Again, the UK dominates search, and you can see how much larger it is, and the underperformance of search in that market really showed its exposure. But we see a strong divergence in terms of the share of search, which is, I think, partly influenced by method in smaller markets, what's being counted. But we are seeing that markets with a fairly weak search market are more gravitating towards programmatic and now the vertical search experience rather than an investment or an outpacing of the horizontal search experience. Classified directories and affiliates. How does this category look like? It's probably the one that has the wildest divergence of all markets. And it was a tough year, particularly for classified and directories, as initially the job market collapsed, the automotive market collapsed, two very, very important pillars for the overall classifieds markets. And of course, consumers were tightening their budgets, i.e. not buying that many goods and services which are being offered. At the same time, we've seen a lot of change happening in the classifieds landscape in particular, with massive consolidation, with Nordic players, Sanoma and Schibsted, with players like Axel Springer buying up classifieds businesses across Europe. And these classified sites are not just selling classifieds ads anymore, i.e. kind of paid listings, but are increasingly monetizing programmatically through display advertising. So what we see here in terms of growth isn't a verdict on the viability of the classifieds business per se, as some of that spend is now in display. So in terms of the classified share, again, a similar picture like elsewhere. We see remarkably Russia here on the third place. France has a very strong business with Le Bon Coin and others, other homegrown classified businesses. And we can see again a strong divergence when it comes to the European share. Lastly, if we look at not just the formats, but at the devices, the market is mobile first and has been in the display space since 2018 and in search since 2019. But we can see when it comes through growth that without mobile, we wouldn't have seen any growth. We saw desktop decline on display, and we also saw desktop decline on search, and a double-digit increase both on mobile, for display, primarily driven by social platforms, vertical video formats, but also apps in particular, gaming advertising and so forth, which had a very strong year 2020. Let's do a little outlook. The year is now 6 months and a bit old. And while Q1 started very slowly and very conservatively, just single-digit percentages above Q1 2019, i.e. before we saw the impact of the pandemic, we saw an acceleration in the second quarter, which of course has very easy comparatives because the quarter in the previous year was down over 30 or sometimes 40% in some markets. So there's this organic rebound, but overall advertiser confidence on top of that is coming back, and we're expecting continued high single-digit growth in Q3, and also due to a very strong quarter in Q4, high single-digit growth overall in Europe in Q4 because the comparatives are tough. So overall, we're expecting an around 10% increase in the digital ad market in 2021. We are seeing no effect at all in terms of the confidence of the digital channel that advertisers are ascribing to it. Some had concerns that the uncertainty around the third-party cookie and Apple's ATT would impact the amount of spend that goes into the market, but we haven't seen evidence of that. We also haven't seen evidence of slowdown in programmatic. And there's one, I think, often overlooked truth when we look at these debates, which is, for us as an industry, as insiders, in particular, as publishers who monetize primarily through advertising, and also all the intermediaries, agencies and ad tech, it feels like an elemental challenge to really rewire and re-architect the entire industry. However, for advertisers, it's not necessarily the case. They're looking at where the consumers are, and quite frankly, although they're developing first-party data strategies, for them, it's not a life and death thing, because successful marketing just needs to be relatively better than the competitor. We can never compare the targeting and measurement paradigm of one era, and we're at the end of a kind of nearly bygone era, with that of the next era. So as long as an advertiser can relatively perform better in terms of customer acquisition, churn management, and so forth, than their competitors, they are doing well in digital. So we shouldn't lose confidence at all. But despite the fact that, of course, now third-party cookies, the deprecation has been delayed, it is no time to breathe, because we need to work as an industry to make this continued growth happen. We need to build this new infrastructure. We need to do more than the bare minimum to adhere to regulations, be future thinking in terms of future privacy paradigms, and work hard together on supply chain transparency, on ad effectiveness, and so forth, to ensure that we build, within the next 30 months, a robust new infrastructure on which this digital world can transact. Thank you very much. And I should say that the study, Helen, correct me if I'm wrong, is available online. If you have questions, do let us know. We also have the underlying data in Excel. So if you want to play with the data yourself for your own models, do feel free to drop us a line.
Thanks, Daniel. Yeah, I've just put a link to the press release in the chat box so that everyone can access it. And then there's a link to the presentation there. And on your request for any questions, Daniel, we've got quite a few that have come in. So I'm just going to start with the first one, which is just looking, is this net spend when looking at non-digital media, i.e. not rate card?
Great question about the rates. First of all, thank you for the question. So all the spend that we look at in the AdEx study is gross spend. So it is in the old world, in the pre-programmatic world, when we select just discounts and rebates, it is after discounts, before agency commissions, i.e. in that old world when, for instance, a publisher was still paying the agency a commission. In the programmatic world, it would sit at the SSP level before the publisher gets the net revenue. This is gross spend. Now, this is very confusing because there are as many definitions of gross and net as there are European markets. In some markets, gross means rate card. In other markets, what we call gross is net 1, and the net that we would call net is net 2. So we have to be very diligent in compiling the information, what local markets actually mean. So our data is in gross, and to the WARC data, it is also in gross. So we are both measuring the same. We are not measuring net revenue.
Okay, perfect.
But
thanks,
also
Daniel.
not rate card spend. So we have adjusted for discount. So some markets, for instance, provided for in particular display and video rate card data, and we needed to apply a discount.
Brilliant. Okay, and then the next one, I'm just going to get to the Q&A box here. So this one has come from Simon Thomas, Group M, and this is looking at broadcast live linear TV. And it really just wants to find out how is BVOD, AVOD, and especially CTV counted. So you can see the questions there.
Yeah, fantastic. Let me put that up. Great question, Thomas. So we have, you're right, linear TV is easily defined, the rest isn't. We just have one video category, as we have not achieved a full alignment across IABs to break out video in more detail. I have indications of pockets of growth within video, i.e. the social component, but we are not breaking out broadcaster catch-up platforms, native AVOD platforms like Pluto TV and so forth. When it comes to CTV, and by the way, this is something that I think we really should be doing to understand better what the dynamics in the video segment are. When it comes to CTV, some IABs include the numbers, some don't, but each defines, again, CTV quite differently. So in France, what we get is numbers that are primarily around IPTV advertising. In some markets, like large, I can't give the markets, but in some large Southern European markets, when we get CTV numbers, they are in the low double-digit millions, i.e. 15, 18 million, which can't be the entire size of the market. So we know we capture everything within the umbrella category video, but the breakouts we get from national markets are currently not robust enough to quantify CTV spend overall. And again, Thomas, you're right, there's the question, right? Should we include HBB TV spend in CTV? Should it just be ads on smart TVs and so forth? This is a question that is most difficult to align on in a national market. I can just imagine the smoking heads in the committees, and much more difficult to do in Europe. But in our working groups, we are working to addressing that. So if anyone has inputs, wants to be involved, has suggestions for definitions and measurement, I'd be delighted to hear your recommendations.
Great, thanks, Daniel. And just to mention there, we are putting into field next week our attitudes to programmatic. And within that, we do actually call out a definition from CTV, which was taken to a buyer's guide to CTV. And we're asking the buy side to actually put their investments. So we'll be having some stats, which we always present at Mexico in September. So early September, we'll have some kind of quantitative data from the buy side that we'd be happy to share. And then just following on, Daniel, this is more to do, I guess, about comparison. So the bubble chart that you had, Simon again just said it would be useful to see USA, Canada, Australia, and one of the two Asian markets as benchmarks. Are you able, we saw the growth we've had 6.8% in Europe. Are you able to put that into comparison as to how Europe performed against some of the other markets?
It's a great idea to contextualize that, in particular now with the kind of COVID recovery. We can say Europe grew less than the US. The US went through the pandemic far better, and we saw, whereas in Europe we still in H2 had in some markets strong correlations between lockdown and ad spend. That went away in the US entirely after the first lockdowns. What I'll do is I'm curious myself to put those numbers in and see how the markets compared. I think one good thing is that with the high vaccination rates we've now achieved in Europe and in the US, that we're actually poised for a robust long-term recovery, which might look a bit more shaky in some Asian markets.
Brilliant, thanks, Daniel. Just a question then, let's just look at some of the different formats. So this one is about digital out of home and whether you would be including that into the report going forward, programmatic digital out of home.
It's a great question. We are currently not including digital out of home in our definition, and some might wonder why. It is mainly to do with trade body responsibilities, a very boring topic. We have some trade bodies like IAB Spain, which has digital out of home within its remit, but others do not. And as this is a study that is based on the data from the National IABs, we have to find a common denominator. Number one, we do not want to infringe on sizes and responsibilities of other trade associations in other markets. And number two, we really want to ensure that everything is comparable. But we did separate webinars in the ETF on the digital out-of-home market, where we have our own European perspective, our IAB Europe view on the size of the digital out-of-home market. So I think in the next digital out-of-home webinar, what we can do is add those numbers in and see how that affects the overall market size.
Brilliant, thanks, Daniel. And I'll put a link, actually, I know my colleague Lauren's on the call. We can put a link to the programmatic digital out-of-home guide that we released. I think that was just the end of last year. And as you said, the economic trends forum that we did based on those stats. So we'll put those two in there for you. This is just a question about between traditional display and social display, whether you're seeing a difference in desktop and mobile spend share for those two particular areas.
We can't break it out, unfortunately, in the study. We have indications in some markets, and yes, social is 90–95% mobile in many markets. So the desktop market is overall stronger outside of social Absolutely. We can't quantify, we can't break it out.
Yeah.
I know kind of anecdotally from some publishers in kind of established markets that it's reaching close to that 50% tipping point as well. But it's more of a kind of company, it's more of a company by company matter, and we don't have the numbers.
Okay, and then just on the social one, ad spend on other social, excluding YouTube, from premium publishers, channels, pages, is this in the social category?
Yeah, so everything is in the social category. That is think of Facebook, Instagram, TikTok, Snap, LinkedIn, Twitter, and in Russia, kind of vKontakte. Those are the largest groups that are included in here.
Brilliant. And then this, I think you're probably going to say no. Do you have in-stream, outstream share in video? We don't break down video.
We used to have last year.
Yeah.
But again, due to reporting changes, we didn't break it out this time. I have it at the back end, but it's a definition question. Different markets define it differently. For some, in-feed advertising is the same as outstream, whereas for other markets, outstream is only what you get on, let's say, it's classic teens advertising and others. So you would see two markets reporting outstream with vastly different shares that are not comparable. However, we have modeled, and I'm happy to share that for total Europe, we have modeled how outstream excluding in-feed advertising would look like.
Brilliant, thanks. And just a request here, which we can absolutely honour, which is about the request to share the Excel with the data. I'm just going to put my email address in here in the chat box so that if anybody would like a copy of the Excel sheets, just email me and we can share that with you. I think if anybody has any other questions, please do add those into the Q&A. Daniel, whenever we present AdEx, and of course, most people know that last year our Economic Trends Forum was dedicated to the pandemic, and you were doing some fantastic kind of monthly updates, looking at future predictions. So I'm just going to ask you, do you have, and you did it last year, do you have a prediction for whether we're going to be seeing any growth in 2021? And then we can play this recording back and see if you were correct.
Yeah, so as I said, so overall, we're currently expecting 10% growth in digital, and it might be conservative actually. Biggest pockets of growth currently are, apart from, of course, video. I would say, and deliberately say video, not CTV, as it's so nascent in Europe. It's a very supply-constrained landscape. We don't have the same MVPDs as in the US, so we shouldn't get drunk on the immediate short-term potential of CTV. But that's a growth driver. Retail media is coming very quickly from a new buzzword just around 12 months ago to something that is really, really robust and substantial. Amazon is going to have a much larger share next year than it had end of 2021 as it had this year. And we're working to better understand the European dynamics of the Amazon business to reflect that in the European figures as well. Plus the gaming section is incredibly strong, both from an app install perspective, but also from a let's play and streaming perspective. Okay,
so your prediction is a conservative 10% growth.
Yes,
we should be seeing
right now. Yeah.
And in terms of the markets that we're seeing this growth coming from, are you still seeing kind of like Central Eastern Europe, the shift there being the ones that are providing a lot of the growth, and then like Turkey and Russia? Will there be any kind of newer markets?
Yeah, so this will continue, of course. It's just an effect of the markets not being mature. The UK has made a tremendous comeback. So we will see we see double-digit growth in the UK. I'd say probably for digital could be up to 20%. I'm also very optimistic on Italy.
Not for the football, Daniel, or we're sticking to digital advertising?
Sticking to digital advertising purely. Fantastic. Yes, okay. Very impartial German here. Although the school next to me is singing It's Coming Home all the time. But the remarkable thing about Italy is it has been a sleeping giant in terms of digital ad market. As I mentioned earlier, the digital presence of Italian businesses has been far below the European average, sometimes even below CEE countries. You had fairly poor broadband penetration, but this is changing. We have seen massive investment in digital businesses coming online, e-commerce booming. So not only did Italy, despite the high cases, economically was the only economy in the Eurozone that grew in 2020. It came out really well, but we often talk about this fast-forward acceleration of that the pandemic has provided. I think nowhere will we see it more than in Italy next year, and I'm certain it will be reflected in digital ad spend.
That's brilliant. Lovely way to end this, Daniel. So thank you very much for that presentation. We have put the link up, and actually my colleague Lauren just put the guide to programmatic out-of-home advertising that's up there as well. So if anybody has got any further questions, you can email myself or Daniel, and we will get back to you on those with the Excel sheet. Daniel, any closing remarks? If you could sum up 2020 in one sentence.
In one sentence, it was a bad quarter and a surprisingly good year.
Fantastic, brilliant. All right, well, thanks, Daniel, and thank you for everyone for attending, and we will post the recording tomorrow on the IAB Europe website. Have a lovely afternoon, and all the best to England and Italy on Sunday's final.
Thanks for joining.
Thanks very much. Cheers. Bye-bye.